Happy Sunday. I hope you're having a good weekend. Since June, the market has rallied and we are in a bear market, meaning we are in a market that consistently went down since the beginning of this year. And at some point, the whole stock market, if you look at indices like the S&P 500, was down more than 20%, which is the definition of a bear market. And this was mainly due to fears around is the economy slowing down, inflation slowing down, and are we going to have another World War III type of thing happening, either with what is happening in Ukraine and what is happening within China and Taiwan? But since then, the market has rallied, significantly in 1 month's time period. And you have now a bunch of influential people on YouTube. You have a bunch of people, professional traders starting to think that, hey, maybe the next market crash might be on the corner because we are still in the bear market. And this whole rally in stocks and even crypto might be just due to what we call a bear market rally, meaning we will go back to where we were just 1 month ago or even lower than that, just because we are not still out of the woods yet. So in this video, I want to give you my thoughts around whether or not we're going to a market crash, but seeing from real data that these people are looking at and people in other data that we might receive in the next week and the following week, pretty much in a very short term, in order to see exactly what is going to be the direction. And based on that, what do we need to do as investors and as day traders or slash swing traders. All right. So let's get into it, folks. I was watching this video from Graham Stephan, so the guy has almost 4 million subscribers on YouTube. And whenever he speaks about something, people tend to listen, right? Selling everything, the next crash is coming. Talking about the stock market. And then you have Meet Kevin, an urgent warning to investors. Usually those type of videos are not as positive, right? And then they are basing their information based on this. I mean, broadly, if you look at the S&P 500 since June, boom, up 13%. But if you look year to date, since the beginning of this year, the market is still up 15%. So if I add this 15% or this 14% to these 13% on this last month, well, we are still below way than the 20% down. All right. So people are thinking this might be the reason why, we're just going to have pretty much some like what we had here. Boom, we're going to have another huge descent, another downtrend. And that's why they're calling on the stock market crash. Now, Graham Stephan is talking about insiders trading activity. Now, insiders trading activity, it's something that gives a pretty clear indication on looking at history. So it's not looking forward, it's back looking forward, because every time the market tend to drop and the market tend to go up, usually you had insider trading. So insiders are people that have access to certain levels, in higher profile levels in the company. The CEO, the CFO, the CMO, all of these directors, all of these senior leaders at companies, because they have the ability to buy huge loads of stocks, whether they are especially stocks of their own company. And usually whenever they buy, the market tends to go up. And whenever they are selling, the market tends to go down. And now it seems as if they are selling at a very rapid pace, because just 1 or 2 months ago, they were buying at a very rapid pace. So Graham Stephan is using this, source of information to pretty much, give a warning that, hey, maybe, just maybe we might be in this, the cusp of another downtrend. Now, also by looking at the market going up, you might think, well, looking at the VIX is this indicator that is the fear gauge. And usually when the VIX has been dropping a lot, like here, pretty much the VIX has been consistently going down almost 38%. People think that the VIX is oversold, meaning the VIX might start to go back up again, because so far this year, look, whenever the VIX drop, that's when the markets are going up. All right. But when it's still very slow, as it was back in November, usually, it means that it may reverse. And whenever it reverses, then the market tends to go down. So these are kind of what people are looking at when it comes to reasoning behind why markets will go down. Now, my thoughts on this is the market went down for two specific reasons. One of those is inflation, and another one is recession fears. All right. Now that we had clear indication that the GDP has been slowing down and we are technically in a recession, all eyes will be on the next GDP, but that is going to be in the next 3 months. So I don't think we're going to have a lot more going on from a GDP standpoint, but we do have some indication. We can have some indications, and I'm going to use what is going to happen next week as first, because next we're going to have the CPI data being disclosed on Wednesday for the month of July. Remember, the CPI, Consumer Price Index, it's still 1 month lagging. So we're going to have the month of July CPI and also the equivalent for companies, the producers, the PPI, Producer Price Index. And we're going to have some sentiment around Consumer Index, what they feel about inflation, and some other earnings. Earnings from companies like Hyatt, Disney, Wynn Resorts, Norwegian Cruise Line, which is also going to give us a pretty good indication on how inflation has been kind of impacting their profits. All right. So for the month of June, the CPI reached a new high, 9.1%. And based on that, markets dropped. And that's when we hit the low so far this year. But I do believe, as for the whole month of July, the price of oil has been going down every single day. Every single day, the price of oil at the pump and in markets has been going down. The West Texas is now below $90 a barrel. Just below $90 a barrel. It used to be around $120 for the whole month of June. So for the month of July, I'm expecting the CPI to start showing up that prices are going back down. All right. For the PPI, it may also be the same thing, because whenever prices drops and other commodities, it means that the margins, the prices that companies are paying to get their input, their sources, their ingredients, etc., will also decline a little bit. So that's number one. So I'm taking this to kind of think in the contrary direction to these guys, just because this is the very first reason why the market went significantly down. And even with the 13% and the VIX being down and these reasons, I still think the market is still recovering, because what caused people to panic and take the money out of the markets, causing this huge sell-off, it's now trending back down, and it's going to be a huge relief. Because if prices are significantly going down, as I think the CPI for July is going to show, then the Federal Reserve is not going to continue to be as aggressive in increasing interest rates, meaning that people will now have more comfort, more confidence, and will be more or less fearful in putting the money into the market. Because right now we are still in the woods. All right, we're still at a very discount. That's why I think there is still room to grow for the market to continue to go up. Now, in addition to this, I also want to add something. Earnings so far have been not as a disaster, not as bad as people thought. And I will also expect this to continue to be the case as we go into the last season of these earnings with the retail companies, such as hotels and everything, Disney, Wynn Resorts, as I mentioned, but also a few tech and other sectors. It will show that, well, even at the highest of inflation, companies still manage somehow to be profitable, even though profits were not as huge as compared to last year, but the market already priced that in. People are already expecting that to be the case. So the bottom line for me is things are getting a lot more better on things that caused the market to sell off initially at the lows of June since the beginning of this year. And as we get some more positive news on that, the market has no way but to go up unless something dramatically unexpected happens, like Russia, declares World War III, or China invades Taiwan, something like that. Then people can get spooked again and will cause the market to go down. So what does it mean as for you as an investor? Personally, as an investor, I don't even look at this in my long-term strategy, like my 401k, my mutual funds, on my Roth IRAs. These are accounts and investments I will start looking at in the next 20 to 30 years. So I'd use this just as an opportunity for me to accumulate as much shares on my favorite mutual funds, stocks and crypto for the long-term view. So it doesn't matter what happens in the market, there is already an automatic strategy for money getting out of my savings account and flowing into those type of accounts because I'm thinking long term. All right. So that's good for me. So I'm not, even sweating for those. Now, from a swing trading perspective or a day trader perspective, on a trading perspective, which, I do on a daily basis or on a regular basis, well, I may think, okay, where I'm positive in terms of gains and profits, where I'm already green, especially since I bought the dip back in June and I've been buying the dip since March, then maybe it's time for me to take a little bit of profit. But the stocks, which is mainly energy and crypto, are still beaten down, even with positive earnings. So as for me, it doesn't make sense for me to get out because I am not in the green yet. Or I'm just barely like 0.5% positive since I bought the dip in June. So for me, I'm still kind of waiting on the recovery. Now, if you are in a different space, different sector, things might be different for you, all right? But I can only speak from my experience, right? Because that's what we're here for. Now, but I don't think the market is going to totally crash. Of course, people might take profits because the whole bottom line in this game is to buy low and sell high. And I think people are going to do that, especially where, they're taking a lot of money. But as we get into next week, of course, we may see some sell-off here and there as people start to prep for what we're going to see. But I think CPI, PPI are going to be some positive news, that the market will use to continue to rally because we are still very far from even a recovery. So that's my thoughts. I may be wrong, but if I am, please let me know in the comment section what you think, and we can build out of that and make our community even stronger. I'll see you in the next one, folks. Thanks.